Welcome to Monday's Market Outlook here at Wealth Creation Investing. My name is Matthew Buckley. I'm the Chief Investment Strategist. And kind of quiet day today, folks. Columbus Day, the bond market's closed. Seeing a little bit of pressure to the downside, but not a ton of volume, and that's to be expected, especially as we've continued for the past couple weeks after QE3 Infinity, and this kind of this dead zone leading up to Q3 earnings, which unofficially kick off tomorrow with Alcoa after the reporting after the close on Tuesday. Like I said, not too much going on in the way of economic reports today. On Tuesday, nothing really to speak about. Wednesday, though, might be a little bit interesting. We get the beige book. We get what the Fed was thinking about last month when they went through their QE3 Infinity talks. So that'll be interesting. Thursday, obviously, we have our weekly unemployment claims and some crude oil inventories. Crude oil has been under pressure recently. It's found a little bit of a bottom here and some support, but folks, with a global slowdown, not only in the United States but in China and Europe, obviously oil is going to be under pressure, but we think it's found a bottom here. And then Friday, some University of Michigan consumer sentiment. That'll be pretty interesting, and also PPI numbers as well. So not a huge week as far as economic reports, but it might be interesting week. First of all, like we talked about, Alcoa coming out with earnings, but it really doesn't matter. Alcoa, as Alcoa goes, the market doesn't go. Some folks said I'm going to be interested to see this week. Wednesday, Costco, and then a couple financials on Friday, Wells Fargo and JP Morgan. So Costco, good barometer of the economy, and for folks who trade live with me, they know I use a Costco barometer. Back in 2008, 2007, as people were loading 62-inch screen TVs into cars that were priced less than that TV, I knew there was a bubble coming. So I like using the Costco indicator of what's going on in the economy. Are people going in there for chips and salsa and leaving paying $600, or are they back to just getting the chips and salsa and the $1.25 or $1.75 hot dog, whatever it is there in the lobby? So, like I said, not too much going on in the market. We're waiting for earnings. Earnings are probably going to be very, very poor. But again, like we've talked about in many of my live trading sessions, if you can't hit the ball over the net, what's the market do? They run out and lower the net. So whether it's FedEx or some other companies came out and pre-warned or said, hey, earnings are going to be pretty nasty here. Well, guess what? Now we have to take a look at a market that is bad, or is bad, really not bad. And it'll be interesting what happens here, especially with the unemployment number that came out last week, which it just cracks me up. That's the largest gain, 1 month gain in unemployment, or since 29 years or something like that. A month before the election, folks. Seriously. And of course, the media didn't report this, but two of the two senior BLS, Bureau of Labor Statistics economists, are Obama supporters and have donated to his campaign. So the media's kind of buried this one. Could you imagine if it was George Bush a month before his election, and all of a sudden, mysteriously, the unemployment rate went down 0.3% to what it was when he took office? I mean, seriously, folks, it's laughable that the media's completely ignored it. But here we are. In a couple minutes here, I'm going to be sending out a trade alert to some of my Top Gun Options subscribers on SDS, Sierra Delta Sierra. Kind of like VXX, the Barclays, derivative of the VIX. VXX, SDS have recently done reverse splits. So this was trading $14, $13, whatever it was last week, and now it's up here in the 50s magically. I love reverse splits because they make no sense. But anyway, I'm going to be selling a bull put spread out into January, and also buying a bull call spread. So it's going to be a double vertical, because we are going to get very bullish on the fact that the S&P is going to go down. What really amazed me the most about the debate last week was not the empty chair that Romney talked to, but the actual lack. Neither of those two gentlemen once mentioned the fiscal cliff. They danced around closing loopholes. Maybe it was high on platitudes, folks, but we are facing the fiscal cliff of financial Armageddon on January 1st, and neither of those two gentlemen mentioned it. It's going to happen, folks. I mean, even if they, throw a Band-Aid on it and extend the Bush tax cuts, it doesn't matter. There's about nearly a trillion in budget cuts that are going to take place immediately. The majority of them being defense cuts, obviously, and we're going to have nothing to do about that. So I want to give you a heads up that later in the week we're actually going to be I'm going to be doing a live trading webinar. You can just go to wealthcreationinvesting.com/WCI presents TGO, and I'm going to do and just sign up for it's going to be this week on Friday. I'm going to do two of them, 9 a.m. which is going to be obviously before the open, and then at noon as well. I'm going to throw out a couple potential actionable trades I'm going to add to our primary model portfolio, which is up nearly 200% year to date. So come join us. Take some time to take a look at what my strategic view is of the market and where we're going from China to Europe to a potential war between Syria and Turkey. Obviously, folks, Turkey is a NATO member. They've been taking some shells from Syria, and an attack on a fellow NATO member is an attack on NATO itself. So technically, the United States was attacked as well, but you won't see that in the media either. So there's a lot going on in the world that's going to impact our markets, and then there's a lot going on in our markets that we have to talk about as well. So, and we have a lot of hedges in our model portfolio, whether it's on volatility, oil, precious metals such as gold. We have, if the world ended tomorrow in our model portfolio, we'd be fine. If the second coming happened tomorrow, we'd also be fine. So that's really what you want to do, is potentially make money consistently in a market like this. And if you're on a day like today when the SPX is down about 6 and the Dow's down 40, this is what your portfolio should look like. You should have some greens, some reds, some light greens, and some pinks. And if you're all red today or all green, you're doing something wrong. So make sure you stop by and register for that event. Join me on Friday, and we're going to do some live trading. And you're going to take a look at two potential actionable trades you could add to your paper trading account. And you can open a free paper trading account in order to prepare for our event at trademonster.com/TGO, because I'm going to use a lot of the tools on the TradeMonster platform in our live trading session. Okay, got to get out a trade alert to my Top Gun Options subscribers on SDS. Like I said, it's going to be a bullish double vertical on the S&P going down, right? It's the ProShares Ultra Short SDS. Okay, folks, got to run, got to trade. Happy hunting. Make sure you hedge, and I'll see you tomorrow for a Top Gun Options sit rep.